Welcome to a new video of Legit Finance. After a span of week, I'm making this video because I'm now being specifying my videos on important topic, not making video on like regular basic topics. I'm just going to the next level to make videos. Okay, so now let's start from the first thing, that is fakeouts. So what are fakeouts? Number firstly, most of the people just fear from fakeouts means their trades are getting eroded. Their trades are becoming like less profitable in this fake out. They are not able to understand why this happens, how this happens, and what is the rule, and how even we can make money from this. Yes, we can make money from fake outs. How? Just first understand what are fake outs. Okay, just understanding what are fake outs. So there will be three. I will be dividing fake outs into three things. Okay, number firstly, to learn what are fake out, this video will be long enough. Okay, I will be divided into three parts. Okay, as I mentioned. Okay, as I said, three parts. This is the first part, this is going to be the second one, and there you go, the third one. Okay, so these are your three parts of fakeouts. So the basic thing that you all need to know about fakeouts is is what are fakeouts, that most of you don't know, and why they happen. Why they happen. Okay, why, sorry for the mistake. Why they happen, and how we can make money from them. How we can make money from them. Okay, so by starting from the first part, that is what are fakeouts. So fakeouts are like misleading people onto the wrong direction before going into the right direction. Means, let's say there is this trend bearish, okay, and market is consolidating, so we know it has to go down because the trend is bearish. So to go let it go down, what will happen, that first it will go up, leading to the wrong direction for the people who will buy and hitting their stop losses, and then going into the right direction, or sometimes going into the right direction first, or sometimes going into the right direction first, then going into the wrong direction, then eventually going into the right directions. So this is called fake out. Okay, so number second thing is why they happen. So okay, they happen to cut, because market cannot give money to all the people. It gives money to a specified group of people which are specifically trading, which are trading with their mindset, with their knowledge, with their news, or many other things comprised. So what I meant to say, that it, for giving some specific money, it has to take other people money. So what it hit the stop losses of the buyers here. When it hits the stop losses of the buyer here, the buyer get out of the market, then they are only sellers in the market that are going to sell. Okay, so that's why it gave fake outs. Number second, in this case, it gives fake outs to trap both sides and only take the professionals in, and give money to the professionals. Means it wants to first, it will take money from others, then it will give money to others. This is eventually the thing why they happen, how we can make money from them. So to make money from them, just understand one basic principle which needs to be understood by all the people, that fake outs are setups, means are systems for big one. Means they are setups for big players. Means the big players trade on fake outs. How they did? Before a big move, eventually against the short term trend, and with the short-term trend, and with the long-term trend. Okay, fake outs tend to happen. Fake outs tend to happen. Okay, so what I meant by this, fake outs are set up for big money. Big money trade on fake outs only. Means they are very focused on trading fake outs. Means they morely focus on trading fake outs because they know on the fake outs they can eat other people's money. So basically they are doing this, eating other people's money and making money from them. So fakeouts are set up for big money. Means big money means the big players. Okay, by the term of big money, I meant to say the big players. Okay, fakeouts are set up for big players. Before a big move, let's say this is the short-term trend. Means in 15 minutes you are seeing this trend downtrend, but in 4 hours you are seeing this uptrend. So this is the short-term trend here. So the fakeouts will happen onto the short-term trend. Okay, sorry, the fakeouts will happen with the short-term trend, and generally the move comes with the long-term trend, LT, with the long-term trend. Okay, means the long-term trend is bullish, so fake out will happen to the bearish side, and then it will go to the bullish side, leading the people, taking the people's money and giving money to the professionals. Okay, so giving money to the professionals. So this was, and that how we can make money from that. Now you understood this basic principle, so just go on this. Okay, If you go down to 15 minutes, which is standard time frame, let's say, okay, on 15 minutes the trend is like bullish. Okay, the trend is bullish. Okay, the trend is bullish. Look at this, the trend is bullish. Okay, this was a bullish trend. Okay, so let's see, is the trend in 4 hour also bullish? Okay, let's see. In the 4 hours, yes, the trend is also bullish, so means we need to see bearishness for means trapping bullish. We need to see a short term bearish trend. This was a short term bearish trend. Now we need to identify number second is fake outs. How fake outs happen? So we need a fake out to the bearish side. This was a fake out for the bearish side. It broke this level, it got up, down again, protecting this level, and then a big candle. This big candle shows us that this was a fake out. Okay, so we can make 2 3 position. How we can make 2? Let me explain. Number first position will be happening, you will be taking number first position on whenever it gets to the previous swing. This was the previous swing. Okay, you have to mark fibo from bottom to down, bottom to up. Okay, and buy on the 70%, 70 to 80%. Keep the stop loss below the swing. Why I'm telling you this? Because at the 70%, what the buyers get feared when they see that they are stop loss, they exit here, but the market then shows it moves. Okay, so there you get. So you need to act against the short term trend. Okay, the short term trend is bearish. Okay, and the long term trend is bullish. So we need to identify bearishness. This was the bearishness here. Again, we need to identify fake out. This was a fake out here. Look at this. This was a fake out. Just note this. This was a fake out. Okay, this was a fake out. Means it didn't close below this, but it just hiked below it. This, so no problem. We will take an example of closing. Okay, so this was something that is essential. Okay, it hit the stop losses, gave the fake out to the down. Then what you have to do? Simply mark from bottom to top. This time you mark from it to wick. Mark from like this, because this wick is so long that you can't mark it from that level to that level. So you have the 70% area here, and stop loss, as I told, below this, because I'm not taking the wick this time because the wick is too long that the calculations can be mistaken. Okay, so there you go, identifying the right place to trade. Okay, another time, just look at this. This was the bearish trend here, so there was no fake out here, no type of fake out here. Okay, the real opportunity was here. Look at this. This was a big fake trend. It swiped all the stop losses above this, below this. All the stop losses got here. Okay, then by taking all the stop losses, marking it from this to this, it came to 50. Then there you go. When it came to the 70 level, near this level, okay, near this level, you can buy. Means near the 70%, as I told you to buy. Stop below this wick, because this time I'm taking the wick below this wick. Okay, this is the 70% level. Not always at the 70%, you can find also supports there. Okay, so minimum 1:3 that you got. So this was all about the video. I'm just going more deep into it so that you can also understand how it works. Okay, so bearish trend, we need a fake out. Okay, and just this was a fake out. Yeah, fake out. Okay, is 70% retracement. We need a 70% retracement. How we can get that? So marking it from this to this level. It got to the 50, then it got to the 70. So look at this, 70. Okay, this. So here you got a stop loss hit. Again, this time you got a stop loss, no problem. Except this, again you have a fake out. Okay, you got one stop. You have to take it. Okay, one stop is just nothing. Okay, marking it from this level to fucking that level. Okay, up. And this fake out. Okay, here. As I told you, you need to take on the 70%, but you can also take on the support level. So here, where is the support level? So the support level is here. This was the order block. We call it an order block. So the support level is 70, 80 to this level. This week, this is the support level. So we will buy on this. Okay, as per our rules and all, the buy in middle of it. Keep the stop loss below this, and 1:3 as a minimum target. Okay, did we got that? 1:2, 1:5, 1:2.5, 1:2. Let it go to 1:4. Look at this. You got it. In between this trade, you got so many trades that will just make you like money. Okay, so this is how you take trades on the basis of fake outs. How you identify fake outs. You can do it in small time frame also. I'm just giving you a big picture of this. So thanks for watching this video. I hope you like this video. Please leave a like, share, and subscribe the channel. Thanks for watching.